So, gold has been breaking all kinds of records. In recent weeks, its prices hit a high of $3,791 per ounce. In fact, they have more than doubled since the start of the Russia-Ukraine war in late February 2022. Central banks across the world have been buying tons of gold. In fact, RBI is the sixth largest holder of the metal after China and ahead of Japan and Turkey. So, how far can this rally go? Is this surge fundamentally justified? Why are more and more companies turning to gold as a reserve currency? And what does it say about the dollar dominance being undermined? What does the spurt in gold loans indicate about new dynamics of lending? What will happen to domestic retail demand? And are there possible scenarios of a correction? My colleague, ET's banking editor Sangeeta Mehta, and Ritesh Jain, founder of Pinetree Macro and one of the foremost influencers in the world of wealth and finance, try to answer these and more questions today. It's Thursday, the 25th of September. I'm Anirban Chaudhary, and this is the Morning Brief.
Hello Ritesh and welcome to the Morning Brief. How are things with you?
Things are good, Sangeeta.
It's been a long time.
Yeah, we've talked a long time back. Yeah.
Yes. In fact, every time the gold prices go up, I think of you because you were among the first few people that I know who spotted the rally in gold. I guess, was it around the Russia-Ukraine war that you said that the trust would be broken?
Yes, the inflection point happened on that day in February, March 2022. So US, ultimately it's about the reserve currency. So US debt has been building up for some time, and I think the hockey stick on US debt started after global financial crisis. I'm sure you would remember that point of time when all the bankers were bailed out. Okay. Just to give some numbers.
Yeah.
In 2007, US GDP was $15 trillion. US debt was $9 trillion. In 2025, US GDP is $30 trillion, but US debt is $37 trillion and rising at the rate of $1 trillion every 100 days. So they just doubled their GDP from 2007 to 2025, but can you see they've quadrupled or more than quadrupled their debt? So more debt has been used to create GDP. I'll just give you some data over here. As per Hirschman Capital, and you can Google Hirschman Capital, there are 52 cases of countries touching debt to GDP of 130% since 1800. 51 out of 52 countries actually defaulted on their debt, either by outright default or they inflated away the debt. And honestly, Chinese being so smart, they understood it very, very early. And they stopped recycling their surplus dollar, which they were getting out of US, exporting to US, in US treasuries in 2013 itself, actually. So all these things started around, I would say, global financial crisis. And then the hockey stick took place after the Ukraine-Russia war, when suddenly Russia was told your foreign exchange reserves lying with JP Morgan or Bank of America in US, you cannot access that reserves. We've taken those reserves. We've confiscated those reserves. It has never happened in the history. How can you do that thing? If tomorrow India, you can see the relationship between India and US, maybe it's not that bad. But what happens if tomorrow's India's relationship is not with US? Our foreign exchange reserves of whatever $700 billion, they don't lie in India. They're actually in United States because they're in dollar. You have to invest in through US bank.
Right.
So what can happen?
Right.
Suddenly you can just say, okay, gone. We are not giving it you back. How is it possible? This is not the world order which we are used to. We've never seen this kind of things happening. So I would say that, cutting Russia out of SWIFT, taking away their foreign exchange reserves is when central bankers, actually that day central bankers became the insensitive buyers of gold. And central bankers don't care if gold goes up or down. They don't look at it from an investor's lens. For them, it's geopolitical.
Right.
You don't hold the debt of an adversary. The thing with gold is that it's a neutral asset. And which sits outside the control of any single country. It's not anybody's liability. So this is all these things that come together at the same point of time, and suddenly you are seeing, gold prices suddenly in front of you rising dramatically.
Hmm. Hmm. But Tish, the thing is that you also said that the dollar will lose its dominance. But do you think it's just this central bank buying gold as a reserve currency has led to the rally, or were there other factors which led to the rally?
So one is, I have just told you, central bankers have become insensitive buyers. And in my conversation with
Yeah.
some very, very high profile investors, it's not only the central bankers, it's a big amount of institutional capital which is moving into gold. Let's say there are people who are even worried about that, there could be capital controls across the world. There is so much debt. Think about it in UK, where billionaires are leaving United Kingdom. Okay. You wouldn't have thought 5 years back that billionaires will leave United Kingdom or they will leave Norway because you're putting too much taxes. Who knows? A time is coming when there will be capital controls in Europe, in UK. Smart money understands this thing. So smart money is actually moving lot of its capital out of the jurisdiction where they are worried about and converting into gold, taking physical delivery of gold. And that gold, they're not even keeping in the same country. In my view, that gold is actually going to, if it is in US, it is going into private vault. Some smart people are putting in Switzerland, somebody's putting in Singapore. I'll give you one more example. US CENTCOM has biggest base in Middle East is in Qatar. Okay? You know what happened in Qatar 2 days back? It was a rule-based order where the entire Middle East is supposed to be under the military umbrella of United States. Right? So you're finding small things breaking out everywhere, and everybody has started understanding that US cannot support them. US cannot provide military umbrella because US is so indebted. Historically, when the empire becomes indebted, has entered into never-ending wars and has nothing to show its debt, gold returns to its place as a neutral reserve asset.
Yeah. So, Ritesh, this brings me back to thinking about the gold standards. We may not go back to the gold standards as it was 100 years ago, but with central banks, with institutions, as you just said, that they are also started buying gold, how will it impact global trade?
Yeah. So I think we will have two separate trade settlement system. US wants to promote stable coins, and anybody who's a part of US, sphere of influence will have to use stable coins to export or do trade with United States. Why they're not using gold, or why Western world is not using gold or doesn't want to use gold? Because the biggest producer of gold in the world are Russia and China. And the biggest amount of gold is not in West, it is actually in East or in BRICS country. So they want to have a parallel system of stable coins. And stable coins will help them in supporting their debt at the shorter end. Anybody buying that stable coins, all stable coins has to be backed by the full faith of United States Treasury bond. So this is one part which will happen in my view. The second will be the non-US sphere of influence, maybe something like BRICS, where obviously there cannot be a BRICS currency. We don't trust China. China don't trust India. Russia doesn't trust China. Brazil doesn't trust Russia. Saudi Arabia and Russia are rivals. Okay. So you cannot have a single currency for BRIC. But one thing all of them can agree on is gold. Everybody can agree on gold. So Saudi Arabia buys goods from China. China buys oil from Saudi Arabia. China has a trade surplus with Saudi Arabia. China tells to Saudi Arabia, okay, here is a yuan, we are bypassing USD. But Saudi Arabia will not like yuan as in its foreign exchange reserves. So China will say to Saudi Arabia, take this yuan, go to Shanghai Metal Exchange, convert it into gold, keep it in the vault over there, or take it away. The other way is what India and Russia has been doing for last 4-5 years. India cannot pay to Russia oil for oil. It cannot pay in US dollar, right? Because Russia has been cut off from SWIFT system. So we are paying them in INR. Now, Russia has already complained, what will we do with this INR? Right? Think about it. We have our gold exchange. We tell to Russia, okay, take this INR. It's lying in your Vostro account. So rupee account are known as Vostro account. USD accounts are known as Nostro accounts. Here is your bank account in India. You have the INR for the oil which you've got it from us. Either buy goods and services from us, or maybe a time will come and say, here is our Indian gold exchange. Convert it into gold. Keep it in a vault, separate vault over here in Gift City, or just take it home, fly it home back to Russia. These are the two new systems in my view which are coming. One for US and its allies or its sphere of influence, which will fall in line. The other is for BRICS kind of countries, which obviously cannot agree on a single currency. Gold will be the currency.
Right, right. The other thing which I wanted to understand from you is that we were going through the data, and most of the central banks have increased the share of gold in their forex reserves. What do you think should be the ideal share of gold in forex reserves, and what are the risks associated with gold as a reserve currency?
So, one, gold is not a reserve currency. Gold is a neutral reserve asset, because a reserve currency has a fiat currency backing to it. It can be printed at anybody's will. Gold cannot be printed at anybody's will, and it is the, if you call about a reserve currency, actually it is the oldest reserve currency in the world, which existed even 5,000 years back. So, as Warren Buffett says, in a normal time, you don't require gold. Gold is a useless asset, and I completely agree with him. When the world is doing really well, you don't require gold as you don't need to keep gold. But when the transition is happening from one reserve currency to the another reserve currency, where the reserve currency stops sharing GDP with rest of the world, stops running current account deficit, stops policing the shipping lines and all, at that point of time, you need to move out of that reserve currency or reduce the share of that reserve currency in favor of something else. You reduce the USD, what will you buy? Will you buy euro? Nah, I don't think so. What? JPY, Canadian dollar, CNY, what will you buy? That's why gold is, which is nobody's liability, cannot be printed, is suddenly becoming 15 to 20% of central bankers' assets. Now,
So even India is 15%, I think.
exactly. So it is 20%. Can it go run higher than 20%? Yes. And I just said central bankers are not worried about the price. They're worried about what will be the end result if tomorrow the world disintegrates the way they see it in front of them, the way they see US picking up fights with everybody, including a penguin island. Then everybody is worried about that we do not, US doesn't have our back. Qatar has just told, you don't have our back. So that's why Saudi Arabia had to go for a defense pact with Pakistan. In that kind of environment, where you bought reserve currency because you were having the military umbrella, then at that point of time, how high is high of gold as a percentage of assets? I do not have that answer. Yes, some of your vassal state will still buy USD or US treasuries, but most of the other countries, are they blind? I'm sure they can see it. No. When country like Poland, which is a serious part of NATO, talks about increasing the gold reserves, and there's something seriously different going on over there. No? In my view, in NATO, Poland has got the strongest military actually. It's not Germany, it's not France. It is actually Poland. It is like, can I see the end of it? No, I do not know, because whenever an empire is, there is a downturn of an empire and the new empire wants to take its place, there is always skirmishes, there is always fights, because everybody wants to be that empire. No? So at that point of time, gold maintains its value. Gold tells you can use me for international transactions.
No, but Ritesh, something which has such a meteoric rise, there is always this concern about correction in the price. Everybody starts wondering when will that correction happen, or what could trigger that correction, if at all. What is your sense?
What will trigger this correction?
Yes.
So correction can come at any given point of time. In April, I was a little bit, getting concerned about gold, simply because everybody around me had started giving me, it's like the Panwala thing or shoe shiner thing. And gold should have corrected because it was massively overbought. What happened was for the next 3 months, it went sideways. Either you can have time correction or price correction. A time correction digests the price. A price correction actually, takes the prices dramatically down. So is it possible that you can have a 20% correction at any given point of time? Yes. Is it possible that a time comes where for 12 months it doesn't go anywhere and people forget about gold and then it is ready for the next leg up? Everything is possible. Now, the question comes is, at what point of time do you need to sell your gold? That is the whole point,
Right.
right?
Yeah, that is the thing, because there is always this apprehension
Right.
that what if there's a massive correction.
Then open economic times one day, and suddenly if you start feeling good about the world, good about your career, good about the future of the world, good about the future of your kids, you don't need gold.
Yeah, but you see, Indians, we have such deep-rooted fascination for gold that, and this rally, if you really see, which is in the last 2.5 years, it's totally outpriced the middle class. What is your sense? Do you think this festival season will see the same kind of demand for gold?
Not possible, no. So thankfully, Indian households, especially in rural and urban India, did not deviate from their holding gold. They continued buying their gold. Urban household increased their financial assets at the expense of gold over the last 2-3 years. I've looked at the data. Indians already have $3 trillion worth of gold, and market cap of Indian equities is 5 trillion. So we are already at 60% of Indian market cap is already the gold. We have 25,000 tons of gold. At current prices, it is $3.25 trillion value of gold with Indian household, mostly with rural and semi-urban Indians, all because of tradition, and second, mistrust of the government, possibly third, there were banking facilities were not there, and they continued that thing. So central bankers own 36,000 tons of gold, which is 20% of the global assets. Okay. So we have 150,000 tons of available gold in the world, above ground gold in the world, mined gold in the world. Indian and Chinese household have 26,000 tons each. It is actually higher than that, but on paper I have the numbers of source of 26 to 27,000 tons. So central bankers gold plus Indian and Chinese gold itself is 60% of the gold is already in the private hands that you know. How much more gold do you want to buy? You already had $3 trillion worth of gold you have with you. So I think what will happen is you will see substitution effect. That is, something becomes quite costly, and instead of that you can consume something different or you could use something different, then you go ahead and do that thing. Now I can understand you will not go to silver, but I can see the platinum demand going through the roof. Platinum at one point of time used to be costlier than gold. Remember 15 years back it was costlier than gold. It has not gone anywhere for the last 12-15 years. So Indians will not buy more gold. Gold will now slowly go into the hands of central banks. So most of the money globally over the last 10-15 years has got concentrated in HNI or very high, obviously very high net worth individuals. And these are the people who are actually increasing their gold allocations. I know of a lot of instances where people have bought vault in Switzerland, taking delivery and putting it in their vaults. And these are HNIs, ultra HNIs. Because I've been told the minimum amount you require to put it to get a vault in Switzerland is $5 million. It's $5 million worth of gold. So there is enough HNIs globally which are shifting into private vault with outside the jurisdiction of the country, which they think that will have capital controls. A lot of this stuff is happening, and they don't care about the price sensitivity the way we care about it, because we look at the price of gold every day. They're not doing it for that purpose.
But the fact is, we keep importing gold. Month after month, we import gold, which puts pressure on current account deficit. And then government has also done away with the sovereign gold bond scheme. You see, that was one way where at least the middle class found a way of having that comfort that we have invested in gold substitute. What is the alternate that government can give to citizens?
Sangeeta, what is the problem? Our citizens are smarter than our government. They are shorting USD through INR, and they are converting their USD into gold. China actually has this policy in place for the last 15 years. 15 years back, Chinese citizens owned only 3,000-4,000 tons of gold. Today, they own 27,000 tons of gold. China told its citizens convert your savings into gold. So what they used to do, they used to buy gold through, you're shorting CNY versus USD, no? Like the way Indians are doing, you're shorting INR, right? You're selling INR, you're converting into USD and buying gold, right?
Right.
So,
Hmm.
so what is wrong with that thing?
So you think this this will continue as
Haven't all of you
it
become
is
rich?
happening in the last.
Haven't
Yes, yes.
Isn't there a smile on your face, on your family, your mother's face or your grandmother's face, who are much better investors than any of our generation, who spend whole of our time on social media looking at next big, you know, next big investment? Correct? No, right? They
Yes,
understood it
yes.
long time back.
That's true. That's true. They have smiles on their face 100%. I totally agree. So this rally in the gold has also kind of led to demand for gold loans. If you see, the overall book has gone up 3 times for the entire banking system. And most of the borrowers are the ones who do not have access to affordable institutional credit. So, for some reason, suppose there's a reversal in the rally.
Oh,
How do you see things panning out?
okay. Okay. The total value of gold with Indian household is between 3.3 to $3.25 trillion at 25,000 tons. Last month's mark to market profit alone on that 25,000 tons was more than $100 billion. The total outstanding gold loans as per RBI data is $35 billion only. The last month's mark to market profit with Indian household alone on that gold which he owns is $100 billion last month alone. The value of their gold has gone up from $1.5 trillion to $3 trillion in the last 3 years. It's a addition of household wealth of $1.5 trillion. The way in Western world, they use HELOC, home equity line of credit, where you are actually doing it against your home, right? And it has become formal. It is now, it's a very big industry. Why can't it become in India? And RBI has already done a lot of work. No? It's saying, I think, if I remember it right, you cannot give for gold loan cannot be for more than against the 70% of the value of the gold, something like that.
Yeah. They have set up those LTV guidelines of 75%.
I'm sure RBI will be having those at some point of time. They will have sleepless nights. The way they brought it down to 70-75%, a time will come where they say, okay, the volatility has gone up too much. I will want to bring it down to 50% LTV. What is wrong with that thing? There is nothing. So you can have checks and balances. You can have better checks and balances. I do not think that you should not use this thing. Chinese are using it for consumption purposes. Their balance sheets are improving. Their consumption is going to go down. Go up. Sorry, go up. So that's why consumption in rural and semi-urban areas I'm not even worried about. It is going to go through the roof. Yes, a lot of it will be financed from gold.
Do you think that silver will be the poor man's gold going forward now that gold becomes kind of almost unaffordable for many?
Actually, that is a reality. Silver is poor man's gold. So think of it as gold as a large cap, gold miners as mid caps, silver as small cap, and silver miners as micro cap. What happens in a rally? First, you see large cap moving, then you see mid cap and micro cap and small caps moving. That is exactly what you are seeing now in the case of silver. Now, the very important thing is, over the last 50 years, the average ratio of silver to gold is 2%. Means silver has been an average 2% of the price of gold. If we say the price of the gold is $3,700, then 2% comes to $64 on gold. I strongly believe before the end of this bull market, it is possible that silver will be 3% of the price of the gold. Having said that thing, silver is a very, very volatile metal. It is so volatile that if you start trading it instead of investing in it, you can actually lose a lot of money. And you need to have this conviction. Is it really that way? Because towards the end of the bull market, people don't chase the large caps. They actually chase the micro caps and the small caps. You would have seen in equity markets, right? It is exactly the same. It is exactly the same in the precious metals market. It's not different. But that time will also coming, where I believe that a time is coming, 3, 4, 5 years, where silver will be between 2.5 to 3% of the price of the gold.
Yeah, so Ritesh, it would be quite interesting to see how the dynamics of these metals shape the commodities market in years to come. Thank you, Ritesh. This was really an interesting conversation. We got to learn not just how central banks buy gold, why they buy gold, and also how different countries are using gold as a reserve currency. Thank you so much, Ritesh.
Thank you, Sangeeta.
That's it for today. You were listening to this episode on the Morning Brief. It was produced by me and Rajas Naik, sound designed by Amrit Reggie. A new episode of the Morning Brief drops every Tuesday, Thursday, and Friday, wherever you get your podcasts. Also, don't miss our brand new show, Corner Office Conversation, where we talk to the most interesting business leaders in India and the world. Thank you for listening in. Have a good remainder of the week.